Mark, we're just talking to Tom there about the tech sell-off that we're seeing globally. Are there macro implications for this?
Of course. I mean, I think AI is the biggest macro theme in the world at the moment and will be the case for some time. As you know, Kriti, I'm in the camp that we are in an AI capex bubble, but that this is not the bursting of it. At some point before the ultimate bursting, we go to a more volatile stage. Maybe we've entered that, but I think even that's debatable at the moment. This sell-off is barely a flesh wound, to put it in terms of Monty Python at this stage. We haven't seen anything too dramatic. In fact, the price action today was quite impressive. I do think over the coming months that we're seeing that circularity of some of these investments, the fact that the really strong earnings from names like Amazon and Alphabet are partially bolstered by billions by the increased valuations of their investments of other AI names. The circularity is getting really problematic. We've seen some really worrying kind of investments and behavior and promises on the data center side from some of these AI names, from these kind of meme stocks, from these momentum stocks. So we're in that more frothy stage. So maybe we're getting to a more volatile stage. I don't think we're close to the ultimate bursting yet, and certainly the price action wasn't too dramatic yet. So maybe we could see another couple of percent here, but I expect people ultimately to buy this dip for now.
Yeah, given how much some people cling to those AI bets, Mark, and how much passion they have, maybe the Holy Grail reference is very relevant. Let me ask you about crypto, which also might be relevant to this conversation. Really interesting trading through October, dropping for one reason, and then the early part of November dropping for what seems to be a different reason, even if actually this morning it's a little bit stronger. What's happening with crypto?
Yeah, it's really interesting to note that Bitcoin today is trading below its 1 year average. It's 365-day moving average. So, the average purchase of Bitcoin over the past year is offside, given there were 1 year from Trump's election victory. That's quite interesting. So therefore, Bitcoin's been actually one of the worst trades of the Trump presidency. And given that he was meant to be the big crypto backer, I think that might change the narrative there. The aspect of why that's going to be fueled on the downside is digital asset treasury companies are having real problems. And I think there's a lot more outflows to come there. So I think we are in a sustained crypto down wave. Bitcoin's constructed to have repeated boom-bust cycles. That's how it works. It can't work when it's stable at high prices. So it's had, I think, a 70% plus corrections over its 17-year horizon. We're overdue another one. I think we're probably in the start of the next 70% plus correction in Bitcoin, and that'll drag the whole crypto sector lower. That'll weigh on retail sentiment. It will be kind of, but it doesn't have a direct kind of feed through to the broader market. Sure, it's going to hurt some of these meme stocks. It's going to hurt some of these marginal momentum names. It's going to be slightly bad for the tech sector. But ultimately, there are real solid names at the core of the tech business. And that's really kind of marginal froth. It hurts the retail index, and that will eventually feed into a wealth effect on the economy. All these problems are growing. And that's why I think the AI bubble will burst next year, but crypto won't be kind of coincide with the collapse of the AI bubble. Crypto will probably collapse first, AI a few months later.